You mentioned kind of the probability of a soft landing. I know that last time we sat down about 6 months ago, back in February, you pegged the odds of a soft landing at about half of what the market was pricing in. The market was pricing in about 70 to 80% at the time. So by that math, you predicted about a 35 to 40% chance of a soft landing. Given what we've seen with the data, the jobs report last week and some of the other data in the last few days, do you still expect about a 35 to 40% chance of a soft landing, or do you think it's less than that?
Yeah, about the same. You know, I mean, first of all, it's always good to look at the odds of what you think as opposed to like get set and say that's the one thing that's going to happen. And you know, there's always a large range of outcomes, and we will all get through that. You know, and so I'm fairly optimistic that we have a mild recession, even a harder one, will be okay. Of course, I'm very sympathetic to people who lose their jobs. You know, you don't want a hard landing, and so. But there's a lot of uncertainty out there, and I've always pointed to geopolitics. I also think the deficits, the spending, the quantitative tightening, the elections, all these things cause some consternation in markets, and so we'll have to wait and see. You know, does inflation really get back to 2%? I'm a little bit of a skeptic on that too, and I don't look as much at the short-term data as about the things that are inflationary but are in the future: deficit spending, green economy, remilitarization of the world, and they haven't really happened yet, but they are going to happen, and they're not deflationary.
Given that prediction, I know that JPMorgan economists are expecting now a 50 basis point cut in September and November, and 25 basis points thereafter. Do you think if the Fed were to do that, it would be a mistake given some potential enduring effects of inflation?
Yeah, I mean, I hate to say this, I don't think it matters as much as other people think. You know, the rate effect itself isn't that critical. And obviously, psychologically, there'd be a lot of chatter about what does it mean? What are they thinking? If things getting bad? So, and maybe that psychological will affect the economy. But I also remind people every day, 325 million Americans go to work, go to their jobs, take care of their families, take care of their kids, build out their house, change a job. And it could be affected by the Fed changing rates by 50 basis points. I don't think so. So if they do it, I'm sure they have good reason to do it, and I'll rely on with their instincts. So I do expect they'll probably do it soon, but they've seen more negative data than they had expected. But it goes back to expectations. All the expectations have been wrong too. So just always keep that in the back of your mind.
If they were to cut by that magnitude, though, does that risk more of a stagflationary environment, which is something you've been warning about?
No, I mean, stagflation would be a recession with a little bit of inflation. So I think what they do in the short run may or may not directly affect that. Obviously, all things being equal, it reduces the chance or the depth of a recession, but I don't know if it affects really what might happen down the road in terms of stagflation.
One of the